SBUX Stock, ticker symbol SBUX. This is one of my favorite dividend growth stocks out there, but is it also in the buying range right now? The stock is nearly flat year to date and dropped multiple times, of which it recovered also, but they are still down 13% from their year to date high. From a dividend point of view, things look pretty interesting with dividend yield at 2.14%, but it's all about the growth. Almost 13% growth rate in the past 5 years. On the 2nd of May, SBUX presented quarter results where they beat on EPS and revenue. For the upcoming earnings, almost all analysts expect a miss, making this stock an interesting buying opportunity. But does this mean that SBUX stock is a buy at current prices? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does SBUX do? SBUX is the most widely recognized coffee chain brand in the world, operating stores across more than 80 countries. The firm operates in 3 segments: North America, international market and channel development, containing grocery and ready-to-drink beverages. The coffee chain generates revenue from company-operated stores, royalties, sales of equipment and products to licensed partners, ready-to-drink beverage, packaged coffee sales and single-serve products. If we dive in the most recent earnings results, we see that the revenue was up 14% and reported at 8.7 billion. Comparable store sales was up 11% globally, of which 12% in North America and 7% international. To me, this is very important. SBUX can easily generate more revenue by opening new stores, but you want them to grow organically as well. EPS was reported at $0.79 and non-GAAP EPS was reported at $0.74, roughly 25% higher versus last year. Active US SBUX memberships reached 13.8 million, up 15% year over year, which is also very nice. If we dive into a more detailed view of the earnings, we see that 11% comparable store sales is primarily driven by a 6% increase in comparable transactions and 4% in average ticket. Within the international segment, we see that China comparable store sales increased 3% by a 4% increase in comparable transactions and a 1% decrease in average ticket. To me, this is very interesting. It's expected that China will play a bigger role in the future for SBUX, and now that China is opening more and more, the next earnings could give us some interesting results. SBUX opened 464 net new stores, bringing the total to 36,634 stores, of which 51% are company operated and 49% are licensed. US and China represent 61% of the portfolio, which is also very interesting. US being the biggest with 16,044 stores, and China sitting at 6,243 stores. Operating margin increased to 15.2% from 12.4% in the prior year. In here we see that North America increased only 3% in new stores, but revenue increased 17%. And most importantly here, net income increased 31%, leading to a higher operating margin. The international segment grew 8% in new stores and revenue grew 9%. But take a look at operating income and operating margin, increasing 74% and 640 bps bottom line. To me, this looks really good. The first segment, channel development, grew 4% in revenue, but operating income increased 32% and operating margin increased 1180 bps, which is insane of course. With earnings like this, you would expect an increase in stock price afterwards, and analysts being very optimistic for the upcoming earnings. But that all changed after the 2023 outlook. Analysts think guidance was conservative and SBUX might surprise us all for the upcoming earnings. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community. and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. SBUX is a 113 billion market cap company. PE ratio is at 32, which could indicate that they are at a premium price right now. Later in this video I will show you my 3 price targets for SBUX, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 34 billion, and in this graph we see that the revenue went up really nice and steady, except for the lockdown periods, which of course makes sense with all the stores being closed. Over a longer period of time margins are growing, but it has been a bumpy ride so far. And ever since 2022 margins have decreased a bit. EPS is going up in the long run, which is of course very nice, but again a bumpy ride. Analysts expect 18 to 23% year-over-year growth in EPS, which is an insane number. To me this looks really good. For the revenue it is also looking really good. Analysts expect 10 to 12% growth in the coming years. For a company this big it is looking really good. Return on assets is sitting at 14%, which is a great number. Return on equity doesn't look really good, but the most important number, return on invested capital, is sitting at 63%, which is an insane good number, especially since it's above the 5-year average. Current ratio is at 0.77, which looks pretty good to me. Over a longer period of time it is between 1 and 2, which is fine by me. Total debt is sitting at 24.5 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at roughly 3.4 billion, so they can't pay down a big chunk of their debt, which is something that I don't like. So to me it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down quite a bit. So I would prefer a bit more consistent pattern here. A thing that I love about this company are the shares outstanding. It's going down in the long run. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.14%, which is a decent number. Annual payout is at $2.12 and payout ratio is at 66%. I prefer 50% or lower, so right now they have only 34% left in cash to buy back shares, pay down debt, open new stores and all other things. With free cash flow going up and down this much, you will see payout ratio also going up and down quite a bit. The 5-year growth rate is at almost 13%, which is a great number and one of the reasons why I love this stock so much. On top of that, they grew the dividends for 12 years in a row, which is also pretty nice. And if you take a look at these numbers, the dividends paid since 2010, you see almost double-digit growth every year. But most recently the growth started to slow down a bit. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time payout ratio is always around 50%, which is a decent level. Most recently it is increasing, but I expect payout ratio to go back to 50% in the coming years. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare SBUX stock with the overall market, in this case the S&P 500. Next to that I added some competitors, Dutch Bros, which is also a coffee chain, and Luckin Coffee. On the 5-year chart we see that SBUX outperformed the S&P 500 and both competitors by quite a margin. In total SBUX returned 124% including dividends. On the 1-year chart it looks pretty different. SBUX still beats the S&P 500 by quite a margin, but Luckin Coffee had the highest return with 92%. On the 6-month chart it's pretty much the same story all over again. SBUX returns 33% and beats the S&P 500 easily, but Luckin Coffee had again the highest return with 93%. On the 1 month chart, it's Starbucks with the lowest return, sitting at minus 0.35%, while Luckin Coffee had again the highest return with 25%. So bottom line, Starbucks beats the S&P 500 and all competitors in the long run. But most recently it looks like Starbucks got beaten by the others in this list. So could this mean that SBUX stock is a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 9, 11 and 13% based on their own outlook but also because of the analysis. For the profit margin I'm filling in 10, 11 and 12% based on their own current outlook and current performance. I put in these same numbers for the free cash flow margin. For the PE ratio and the price of free cash flow I'm filling in 20, 25.5 and 25. It's the biggest coffee chain restaurant company in the world and they are still capable of growing at high numbers. So I'm willing to pay a premium for the stock. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now SBUX stock is at $98. I hit analyze and we only see one green number. We have a low price target of $65, which is a big drop from the current stock price. We have a mid price target of $91, which is still a decent drop, and we have a high price target of $125. To me, the mid to high price target is the most justified here. As said before, it's a big company that is capable of growing at pretty high levels. This means that my final price target is in the range of $91 to $125, indicating that they are undervalued, but it would be great to see lower prices. My final conclusion on the stock is that I really like the company. It is one of my bigger positions right now and the company is facing some short-term problems. Free cash flow isn't really steady and consistent, so this is something that I don't like obviously. With China opening more and more, the company is heading towards a bright future in my opinion. There is so much growth potential for this company left in Europe and Asia, so I'm really bullish on this part. I hope they report decent earnings but the stock goes down big time. I would love to see $80 or $90, which is roughly my cost average. Whenever the stock drops, I'm planning to buy a lot more shares of this company since dividends are great, the company has a big moat and with the stock dropping, it might also becoming an interesting value play. For now I'm just waiting. I have the feeling that the earnings could have a big impact on the stock price, positive or negative. In the meantime, I will keep collecting the dividends and analyze the company from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.